This is Alan Bush with ADMIS. In the stock index futures, we are seeing some good gains in the overnight trade. This linked to news that there is a better tone to the investor and analyst outlook in Germany. However, we did see some pressure developing more recently as traders tend to refocus on the bearish influence of a potential Fed tapering of their quantitative easing program. Every month, the Fed is buying $85 billion in treasuries and mortgage-backed securities to support the economy. We feel, though, even though we are hearing more and more talk about a tapering, when the Fed does actually reduce the quantitative easing to one degree or another, we still have the Fed funds target at 0 to 25 basis points, which is extremely accommodative. So even when there is a tapering, this may not top out the stock index futures market, even though there could be a temporary sell-off with the Fed as accommodative as they remain. Over in the currencies, as the Fed tapering talk continues, in fact, there's more talk that they could reduce the bond purchases at their September meeting. This has become very friendly now for the dollar index over the last couple of days, and we are seeing good gains in that market. By the same token, this interest rate differential influence is putting a lot of pressure on the other currencies. Even though we did have some bullish economic news out of the Eurozone, the Euro currency is lower, ignoring that bullish news. Also, we have the pound lower, even though we did get bullish news in the form of house prices advancing to a 7-year high in the UK. Pressure in the Australian dollar. This after several days of better prices linked to an improving Chinese economic situation, at least it would appear so with some of their data. But lower prices for the Australian dollar yesterday and today as interest rate differentials turn more bearish toward foreign currencies and more bullish toward the US dollar. We do feel that the Australian dollar will continue to work lower longer term, and we will probably see new lows for the move in the Australian dollar. And in the credit markets, sharp declines today. All of this, again, focusing on the Fed taper talk, which would be bearish for the treasuries. Some additional pressure with the German economic data coming in better as it did in the overnight trade. So we feel that the main trend is lower, especially at the long end of the curve, and this is a trend that is likely to last several months. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.